All right, here we are again, back again with all new market reports for the Indianapolis and surrounding suburbs. I am here. I'm joined with Mike Taylor, broker, owner of Red Door Property Management. Mike, how's it going? Are you ready to dig into this?
I am ready to dig into this, Chris. The sun is out. I haven't seen the sun in like 3 weeks, so I am super excited. It's a little bit warm. I can't tell you how pumped I am just to see the sun.
Yes, not only the sun, but we're also nearing, 50, 55 degree temperatures. It's almost like we're at the beach. Yeah, I almost scrubbed this entire video and just headed outside, or maybe I should have just done the video from my front
We
lawn.
should
It's
have. We
amazing.
should have.
Cool. Well, let's not waste any time. Let's dig into this. Let's get into what the people want to hear, want to see. They want to know what's going on in the Indianapolis market. And I've got to tell you, just kind of quickly skimming over it a few minutes ago, I'm seeing some really positive things. I'm not going to spoil anything, so we're going to jump in and just stay tuned. I might get excited. I might jump around. Let's just see how it goes. All right, here we go. Indianapolis market report, January 2024.
Let's jump in. Yeah, it does seem like we're seeing some positive trends early in the year. I mean, again, this is January's data, but we get a little sneak peek of February, but it seems like we're getting some positive trends early in the year, which is super, super exciting and super encouraging. We kind of had a weird year last year with pricing and days on the market and stuff like that. So maybe leveling out a little bit this year. Let's take a look and find out. Jumping right over here to median rental price over time. So this dark blue line here is 2024 data. Again, we're looking at January. We get a little sneak peek in February, so that's the great news. So January did start off a little bit lower than last year. So I say a little bit, but 4.5% over last year, and then just down slightly from December of 2023. So that's a pretty slight decrease. So the average rent in all of Indianapolis, 1307. The bright spot here is this huge trend up towards February. So I'm really excited to see what happens in February. And in all honesty, that's kind of more of a, what I would consider a normal trend. Last year for Indy was pretty flat, and then it just kind of dove off. But I'm kind of hoping that maybe this year we see something a little bit more normal. If I could find my pen here, I might draw it, but this might be more of a normal if it kind of follows like that, and then it eventually tapers off in December. That's kind of more of a normal thing. So I'm hoping in the spring and in the summer we may actually see prices up year over year. That's kind of what I'm.
And let's hope so, right? Let's hope that's exactly what happens. I suspect you're probably right. Now, it doesn't surprise me. The more I think about it, to see January's median rental price lower than last year, we talked all during these previous market reports that we've done. The correction, right? I mean, this time last year, every investor was trying to maximize their rental value, trying to achieve what was really almost unachievable, right? In my opinion, looking back. And there was a correction, and now things have begun to stabilize. So, and as we quickly skimmed over these market reports, I'm trying to call back here, and I can't. I think we'll see that same kind of trend even in these other suburban areas that we're going to look at. Is we're going to see the median rental price starting out this year lower than they were the previous year, and I highly believe that that's probably why.
I mean, that's normal. It's more normal in the before COVID, is you would see like the market would kind of die in November and December, and then January and February would kind of like come back to life, right? So maybe we're just kind of getting back to more of a normal trend. Investors, like you said, have kind of had that reset. Everybody's kind of come back to earth in terms of rental price, a little bit more realistic. I mean, obviously everybody's listening to this YouTube channel, so you know what's going on. I mean, everybody's educated, so. Anyway, I'm encouraged. The one thing that's a little dicey this month is average days on the market is at 72. Last year this thing was all over the board, so I'm not sure what to make of this, if it is still that correction or what. Definitely something to keep track of. I'm going to jump to the next slide just for a second to talk about active homes, because active homes are at 2112. Again, we put together this second set of slides to put some of that into perspective. Let me jump there and then I'll jump back here real quick. But
Sounds good.
the second set of slides will show us inventory. We'll go on this left one here. So active homes over time. You can see fairly steady. It is up year over year. The red line here is 2024. And so we are seeing a little bit of an increase over last year. That's not super concerning because there's more inventory. Honestly, with rates being so high, there's more renters out there right now. So it's not a huge spike that is concerning to me, but it is definitely up year over year, although it is down from December. So just something to keep an eye on. It just gives us a little bit of data there. And then, as I mentioned, days on the market was super erratic in the Indianapolis market last year specifically. I mean, all the way from 43, that was actually the lowest point in the market last year, which just defies all logic. It doesn't make any sense at all. And then we in June, which is the exact opposite of what you would expect. So
exactly.
I don't know. We're at 72 here for this month. We'll keep an eye on it. 72 is not great. This time of the year, I'd like to see it more around like that 30 to 45 days on the market, and then trending down, closer to 30 or 25 as we get into spring and summer. So definitely something to keep an eye on for sure. Hopefully it's not as erratic and sporadic as it was.
Yeah, exactly. And a couple things I'm just going to jump in here that I want to mention is, number one, this is the data that you're looking for, right? This is why you're watching these market reports month over month. This is why you're tuning into our YouTube channel. This is why you're dialed into what the market's doing. So that, number one, when your neighbor's on the market for 72 days, which is the current average in the Indianapolis area, you're ahead of the game. You can make the adjustments to your market rates, your market rent, lower it another $50, maybe even $100 to place your tenant over a month sooner than your neighbor, and you've already made that money. You have income on the property. Now, if you're not tuning in, you're still trying to achieve this massive market rate, and you're going to be on the market for a couple months plus, and that's an absolute mistake in my opinion. And then I also want to mention, right, we have more active homes in the market here in January than we did the prior year. That completely makes sense. If you're in tune with these market reports, you've heard me continually talk about investors being driven to invest in real estate. Not only are we seeing expansion here in the Indianapolis area in the surrounding suburbs, but also what I really love to see is this downtick from active homes on the market from December and then going into January. And then into February, we're going to get a sneak peek into that. It's continuing to downtick some more. I mean, that's awesome. I mean, that tells me that the clientele in the market right now is starting to get a little bit more comfortable. There was a lot of fear going on in the market as we were getting closer to Christmas, right? Nobody knew what was going to happen in 2024. The market's going to crash. The stock market's going to crash. Well, none of that happened, right? So I think there's some comfortability now entering into the market, and I think that's what we're seeing right here, right now. And if that is all the case, I don't think the 72 days on the market is anything to be concerned about. I think that will inevitably tick down.
Well, the trend lines are pointing in the right direction, that's for sure. Inventory is going down, as we can see. Average rent most likely going up in February. So the trends are looking good for Indianapolis. And like you said, kind of broader economy. It looks like you said, the recession fears have kind of calmed down a little bit. I think everybody's kind of guessing that Fed's going to ease up on interest rates either later this year or early 2025. So I think everybody's feeling a little bit calm, in general.
Yeah. Let's see what happens. Most importantly, stay tuned in. Let's see what happens in February.
Absolutely. Then real quick, we'll go over the sales data for Indy, and then we'll jump into the next one. But average sales price for Indianapolis, again, I know I always say this, but it's just so shockingly affordable here. $228,140 is your average home that's sold. Again, this is from an investor's point of view, so those are homes under $500,000. The sales are heading in the right direction in terms of price, so that's up 5% from last year, up just a little bit, 1.37% from last month. So heading in the right direction, but still extremely affordable, which makes it super attractive from an investor's point of view, especially from somebody maybe from California, Arizona, Colorado, anywhere else besides here. That is an extremely affordable home.
Absolutely. Let's get into a market where you're spending $230 on a home and your average rents are now taking up to $1,350 in February. I think that's a no-brainer.
Absolutely.